10. Smart credit tips to unlock hidden wealth. You're likely leaving money on the table, and I'm not talking about a few bucks. I'm talking about thousands, maybe even tens of thousands of dollars over your lifetime, all lost to high interest rates and missed opportunities. Why? Because you might be ignoring one of the most powerful financial tools you have. In this video, I'm showing you the smart credit strategies for your personal and business life that unlock better loans, lower interest, and ultimately, your financial freedom. We're about to pull back the curtain on how a single number can shape your financial future and how you can take control of it, starting right now. Let's be honest, the word credit can feel heavy. For some, it's a source of stress, a constant reminder of debt. For others, it's this complicated system they'd rather just ignore. But what if I told you that changing how you think about credit is the first step to building real wealth? When you manage it right, credit isn't a liability. It's a powerful asset. It's the tool that helps you buy a home that grows in value or fund a business that creates income. A strong credit profile is your golden ticket. It gets you the best financial products out there. Mortgages with unbelievably low rates, credit cards packed with rewards, and business loans that can seriously fuel your company's growth. A great score can even lower your car insurance premiums or help you skip security deposits for utilities. It's not just about borrowing money. It's about making your money work harder for you. So, here's the plan. First, we'll tackle personal credit. I'll lay out the essential habits you need to build and keep an excellent score. Then, for all you entrepreneurs and small business owners, we'll move into the world of business credit. You'll learn how to build a financial identity for your company that stands on its own, protecting your personal assets and opening up brand new ways to get funding. Whether you're starting from zero or just want to fine-tune your finances, these tips are actionable and can be transformative. Let's get started. Smart personal credit management is key. Mastering your personal credit is the foundation of a healthy financial life. It's what lenders check first, and it touches almost every big money decision you make. Building a fantastic score isn't about some secret trick. It's just about consistently practicing a few key habits. Let's break them down. 1. Pay your bills on time. Every single time. This is, without a doubt, the most important factor for your credit score. Your payment history makes up 35% of your FICO score, which is the model most lenders use. Just one late payment can knock your score down and hang around on your report for years. And this isn't just for credit cards and loans. It can include your rent, utilities, and even your phone bill. The message you're sending to lenders is simple. You can count on me. To make sure you never miss a due date, make technology your assistant. Set up automatic payments for at least the minimum amount on all your accounts. That's your safety net. Then, add reminders to your calendar a few days before the due date so you can pay the full balance if possible. Consistency is everything. Over time, a perfect payment history speaks volumes about how reliable you are. 2. Master your credit utilization ratio. The second biggest piece of the puzzle is your credit utilization ratio. This accounts for about 30% of your score. It's simply the percentage of your available credit that you're using. So if you have a credit card with a $10,000 limit and you have a $3,000 balance, your utilization is 30%. Lenders get nervous when they see you maxing out your cards. It can look like you're in financial trouble. The old rule was to keep your utilization below 30%. The new standard for those with the absolute best scores is to keep it in the single digits, below 10%. There are a couple of ways to do this. The obvious one is to pay your balances in full every month. If you do carry a balance, try making a payment before your statement closing date. The balance on that date is what gets reported to the credit bureaus, so paying it down early means a lower utilization number gets reported. Another pro move is to ask for a credit limit increase. A higher limit instantly drops your utilization ratio as long as your spending doesn't creep up with it. 3. Build a long and healthy credit history. The age of your credit history also matters. The longer your accounts have been open and in good standing, the better. This is exactly why you should think twice before closing old credit cards, even if you don't use them. Closing an old account can shorten your average account age and shrink your total available credit, which can nudge your utilization ratio up and your score down. If you're just starting out, you need to build this history responsibly. A great place to start is with a secured credit card, where you make a small cash deposit that becomes your credit limit. They're easier to get and report to the credit bureaus just like a regular card. Another option is a credit builder loan, which is designed specifically for this purpose. You make small payments over time, and at the end of the term, you get the full loan amount. Finally, you could ask a family member with amazing credit to add you as an authorized user on one of their older cards. Their good payment history can show up on your report and give you a serious head start. 4. Choose a debt payoff strategy and stick with it. If you're carrying debt, you need a battle plan. A clear plan is essential for both your credit health and your sanity. Two of the most popular methods are the debt snowball and the debt avalanche. The debt snowball is all about psychology. You pay off your debts from the smallest balance to the largest, no matter the interest rate. You make minimum payments on everything, then throw all your extra cash at that smallest debt. Once it's gone, you roll that payment over to the next smallest one. Knocking out a debt fast gives you a motivational boost that keeps you in the fight. The debt avalanche is for the numbers people. With this strategy, you focus on paying off the debt with the highest interest rate first, while making minimum payments on the rest. This approach saves you the most money on interest in the long run, but it might take longer to get that first win if your highest interest debt is a big one. There's no right or wrong answer here. The best method is the one you'll actually stick with. If you need quick wins to stay motivated, go with the snowball. If you're driven by the math, choose the avalanche. Just pick one and commit. 5. Actually use a budget. You can't manage your credit if you don't know where your money is going. A budget isn't a punishment. It's a plan that puts you in control. Start by tracking your income and expenses to get a clear picture of your financial life. Use an app or a simple spreadsheet to see where you might be overspending and where you can cut back to find more money for your goals. This goes hand in hand with mindful spending. Before you buy something you don't strictly need, just pause. Ask yourself if it aligns with what you're trying to achieve financially. That simple habit can stop impulse buys that rack up debt and stress. Transition to business credit. Okay, so we've covered the personal credit playbook. But for all of you who are entrepreneurs, freelancers, or small business owners, this next part is for you. You could have a perfect personal credit score, but if you're mixing your personal and business finances, you're creating an accounting nightmare, putting your own assets at risk and stunting your company's growth. It's time to build your business's own credit profile. Smart business credit strategies. Building business credit is one of the smartest things an entrepreneur can do. It creates a wall between your business and personal finances, protecting your house and car if the business ever hits a rough patch. Strong business credit also unlocks higher credit limits, better loan terms, and more favorable payment schedules with suppliers, all critical for managing cash flow and growing your company. Here's how you build it from scratch. Strategy 1. Make your business a separate legal entity. Before you can build business credit, your business has to be a legitimate, separate thing. This starts with your legal structure. Being a sole proprietor is easy, but it offers zero separation between you and your business. Forming an LLC, limited liability company, or a corporation is the first real step to creating that protective shield. Once your business is registered with the state, get an employer identification number, EIN, from the IRS. Think of it as a social security number for your business. It's free, and you can get it online. With that EIN, you can open a dedicated business bank account. This is non-negotiable. All business money must flow through this account. This creates a clean financial trail and shows lenders you're serious. Strategy 2. Get your DUNS number and get on the map. To even have a business credit file, you need to be registered with the business credit bureaus, and the big one is Dun & Amp, Bradstreet, D&AMP B. To get in their system, you have to apply for a DUNS number, which is a unique 9-digit ID for your business. It's free to get one. This number is used worldwide and is often a requirement for government contracts or working with big companies. Once you have it, D&AMP.B can start building your credit file and generate your Paydex score, which is a key measure of your payment history. Strategy 3. Open business credit cards and vendor trade lines. Now that your business is official, it's time to actually build credit. The easiest way to start is to open a business credit card using your company's name and EIN. Use it for regular business expenses and, just like with personal credit, pay the bill on time or even early. Many business cards will look at your personal credit at first, but as you use the card responsibly, you'll build a credit history that belongs solely to your business. Next, set up trade lines with your vendors and suppliers. A trade line is just a credit account. Many suppliers for things like office supplies or shipping will offer you net terms, like net 30, meaning you have 30 days to pay an invoice. Before you sign up, ask them if they report your payment history to business credit bureaus like D&AMP, SAB, Experian, or Equifax. Companies like Grainger, Quill, and Uline are known for doing this. Paying these invoices early or on time is one of the fastest ways to build a strong business credit profile. Strategy 4. Manage your own credit, like a pro. As your business grows, you'll probably start offering credit to your own customers. It's so important to have a solid system for this. Create a clear credit policy that your customers understand. Use accounting software to automate your invoicing and send out payment reminders. This helps your cash flow and shows lenders that you run a tight ship. You should also keep an eye on your customers' payment habits. If someone is always paying you late, you might need to adjust their terms to protect your own business. Managing who owes you money shows lenders that you're a low-risk borrower yourself. Strategy 5. Build real relationships with lenders. Finally, don't treat your bank like an ATM. Build a relationship with your banker. Be proactive. If you see a potential cash flow problem on the horizon, talk to your lender before you miss a payment. They might be able to help you out. A good relationship built on trust and transparency can lead to better terms, bigger credit lines, and more support when you really need it. It shows you're a strategic business owner, not just a reactive one. If you're finding these strategies helpful, do me a favor and hit that like button and subscribe to the channel for more. Now, I have a question for you. What's the single biggest challenge you face with credit, personal or business? Drop it in the comments below. I read all of them, and your feedback helps me figure out what to cover next. The main takeaway today is this: credit isn't something to fear. It's a tool to be mastered. For your personal life, it boils down to simple, consistent habits. Pay your bills on time, keep your credit usage low, and let your credit history grow. For your business, it's about creating a separate identity, building relationships, and proving you're financially responsible. Each of these steps might seem small on its own, but together, they build on each other. They create a powerful financial reputation that opens doors you thought were locked forever. You get access to cheaper loans, which frees up money to invest. You get better terms, which improves your cash flow and lowers your stress. You unlock a level of financial freedom and opportunity that lets you build real, lasting wealth. Don't leave that hidden wealth on the table any longer. Take control of your credit, and you take control of your financial destiny.